Hi guys, it's Stock Curry, and the Fed just raised interest rates by 75 basis points. In today's video, I'm going to go through everything Jerome Powell said and explain it to you, and then we're going to talk about where I see the market going from here. So let's get into it! To summarize what happened today, the Fed raised its benchmark interest rate by 0.75 percentage points or 75 basis points, which was the largest increase since 1994. Now, this month's Fed meeting was a little bit unique because in addition to the actual Fed meeting where they discussed raising interest rates and just overall monetary policy, they also released their Summary of Economic Projections, or SEP. Now, this is a quarterly report that goes out that essentially the Fed members get together and they individually state where they see the economy going over the next 6 months to a year. And then those results are all aggregated and we come up with an average for each of the benchmarks. So in today's video, we're going to be talking a lot about the SEP, or Summary of Economic Projections. And to summarize what the SEP said, the Fed's benchmark rate will now end the year at 3.4%, which is up 1.5% from the March estimates. Officials also significantly cut their outlook for 2022 economic growth, now anticipating just a 1.7% gain in GDP, down from 2.8% in March. So overall, the SEP sees a significant slowdown in economic growth. They also see interest rates being raised faster than originally projected, and they kickstarted it by raising interest rates by 75 basis points at this current meeting. Now, that's a lot to take in, so what I want to do is I want to go through Jerome Powell's remarks when he was answering questions to the press, because it gives a lot more insight into what the Fed was thinking, why they did the 75 basis point rate hike, and where they see the economy going from here. So let's review some of Jerome Powell's remarks.
So as I mentioned, we 75 basis points today. I said the next meeting could well be about a decision between 50 and 75. That would put us at the end of the July meeting, in that range in that more normal range, and that's a desirable place to be because you begin to have more optionality there about the speed with which you would proceed going forward.
So Jerome Powell is projecting that at the next meeting in July, they're going to do an interest rate hike of either 50 or 75 basis points, depending upon the economic projections. Now, at that time, the interest rate should be over 2%. And what Jerome Powell is saying is once the interest rate gets back up to a normal interest rate, which is, in the 2% range, that gives the Fed a lot more options. So if we do enter into a recession, they can lower interest rates in order to get us out of that recession. And if inflation continues to go higher, they can raise interest rates in order to fight inflation. So it gives the Fed options in monetary policy once we get back up to an interest rate between 2 and 3%. So that's what Jerome Powell was saying right there.
We'd like to see the labor market getting better in balance between supply and demand. And that can happen both from supply and demand. Right now, demand is substantially higher than available supply, though. So we feel that there's a role for us in moderating demand. Those are the things we can affect with our policy tools. There are many things we can't affect, and those would be, the things, the commodity price issues that we're having around the world due to the war in Ukraine and the fallout from that, and also just all of the supply side things that are still pushing upward on inflation.
Jerome Powell's saying two really important things here. The first thing he says is that he wants to see the labor market get back in balance. In other words, Jerome Powell does not like the situation that we're in right now, where we have more job openings than we have people looking for jobs. That is not healthy. It shows kind of like the economy is too strong and the economy can handle higher interest rates and more layoffs, because those layoffs will then fill the open positions. So that's what Jerome Powell's saying there, and we're going to talk about more on that note a little bit later because it gets way more interesting. The other thing he talks about is that there are only certain things that the Fed can control. There are certain things that are out of the Fed's control. And again, we're going to talk about more about that in just a minute here.
short-term inflation is going to be high, but comes down sharply over the next couple of years. That's really where inflation expectations are. And also, as you get away from this episode, they get back down close to 2%.
Short-term inflation is going to be high, but then it comes down sharply and eventually gets back down closer to 2%. Where have we heard this before? Well, pretty much every single time Jerome Powell says that inflation is transitory, he talks in this way. It sounds like Jerome Powell still doesn't get it. This was just the very beginning of the question marks that start to go off in her head, that the Fed might still not be quite on track to get inflation under control. It's about to get a whole lot worse, though. Just wait.
I would like to think, though, that our guidance is still credible, but it's always going to be conditional on what happens. This is an unusual situation to get, some data late during blackout, pretty close, very close to our meeting. Very unusual to one that would actually change the outcome. So I've only seen, in my 10 years plus here at the Fed, I've only seen something like that, even close to that, one or two times. So I don't think it's something that'll come up a great deal.
So what Jerome Powell is talking about here is the Fed likes to project what they're going to do. So leading up to the Fed meeting, before they have a blackout period, the blackout period is a few days before the actual meeting starts, where Fed members are not allowed to talk to the press or really say anything at all. And it's a blackout period so that they can focus on their job and what they need to do. And they're not leaking anything to the press or the markets. Now, this was a very unusual situation. Like I said, the Fed likes to project what they are going to do. And what Jerome Powell is saying is this was an extremely rare situation where economic news came out very, very late in the cycle during the blackout period. And he's talking about the very high CPI inflation numbers here. And those very high CPI inflation numbers are what caused the Fed to decide to do a 75 basis point rate hike, even though they had projected to the markets that they were going to do a 50 basis point rate hike. So Jerome Powell is saying he really does not like going differently than what they are actually projecting. He much prefers to do exactly what he's projecting. And this was an extremely rare situation where the Fed, unfortunately, was not able to do that. What that also means is, in the future, whatever the Fed projects, listen closely, because there's a 99% chance they're going to do exactly what they project. This was an anomaly. 99% of the time, they're going to do exactly what they project. So listen closely, and this is going to help you a lot in making trading decisions in the future.
Their objective, and this is what's reflected in the SEP, but our objective really is to bring inflation down to 2% while the labor market remains strong. I think that what's becoming more clear is that many factors that we don't control are going to play a very significant role in deciding whether that's possible or not. And there I'm thinking, of course, of commodity prices, the war in Ukraine, supply chain, things like that, where we really can't, the monetary policy stance doesn't affect those things. So, but having said that, there is a path. There's a path for us to get there. It's not getting easier. It's getting more challenging because of these external forces.
Now, what Jerome Powell is saying here, and he's going to go into more details in just a minute, but what he's saying here is that there are certain factors that are just outside of the Fed's control. The Fed can't control commodity prices, which, of course, directly impact food and energy and gasoline prices. The Fed can't control a war in Ukraine. And even though the Fed's goal is to get inflation down to 2%, and to keep the economy strong and to keep the job market strong, that's their goal. The problem is there are so many factors that are outside of their control that the Fed being able to reach their goal is getting more and more difficult and closer to impossible, meaning the Fed literally is going to be unable to get inflation down to 2% and keep employment strong by themselves. It's getting to the point where the Fed is losing control of the situation. All right, this is where it starts to get scary, but wait, there's more.
So the new projections show the unemployment rate ticking up through 2024. Is a higher unemployment rate necessary in order to combat inflation? And what is lost if the unemployment rate has to go up and people lose their jobs in order to control inflation? Thank you.
So you're right. In the SEP, we have unemployment going up to 4 point. The median is 4.1%. There are, of course, a range of actual forecasts, and I would characterize that if you were to get inflation down to, on its way down to 2%, and the unemployment rate went up to 4.1%. That's still a historically low level. We hadn't seen unemployment rates below 4% until a couple of years ago. We'd seen it for like 1 year in the last 50. So the idea that 3.6% is historically low in the last century. So a 4.1% unemployment rate with inflation well on its way to 2%, I think that would be I think that would be a successful outcome. So we're not looking to have a higher unemployment rate, but I would say that I would certainly look at that as a successful outcome.
Okay, this is really important to understand. What Jerome Powell is saying here is their goal is to get inflation down to 2%. In doing so, they understand that the unemployment rate is going to rise. In other words, this is going to put a damper on the economy. And what Jerome Powell is saying is their summary of economic projections, the Fed members, their average projection is that the unemployment rate is going to rise to 4.1%. And Jerome Powell is saying we're fine with that. We're fine with some job loss. We're fine with the unemployment rate rising. And if we can get inflation down to 2% and we can get unemployment to only go up to 4.1%, that would be a success. That would be Jerome Powell's so-called softish landing. That's Jerome Powell's goal, okay? But I want you to remember what Jerome Powell just said right before he made that statement, that being able to do that is becoming impossible because there are too many factors that are outside of the Fed's control. So the Fed is going to raise the unemployment rate. He's going to hurt the economy in order to get inflation down. So now let's take a little bit closer look at what the Fed actually has control over and see how likely it is that they're going to get this softish landing that he's still going for.
As you just mentioned, the committee is now projecting a 0.5 percentage point rise in the unemployment rate in the SEPs over the next couple years. And it removed a line from its policy statement about thinking that the labor market can remain strong while it tightens policy. You just mentioned that that is still your objective, though. So I'm wondering if you could explain why that line was removed from the statement, and also whether this means the FOMC is trying to induce a recession now to bring inflation down.
Not trying to induce a recession now. Let's be clear about that. We're trying to achieve 2% inflation consistent with a strong labor market. That's what we're trying to do. So let me talk about that sentence. Clearly, it's our goal to bring about 2% inflation while keeping the labor market strong, right? And that's kind of what the SEP says. That the SEP has inflation getting down to a little above 2% in 2024 with unemployment at 4.1%. So, and this is a strong labor market. This is a good labor market. And as I mentioned, there are pathways to do it. But those pathways have become much more challenging due to factors that are not under our control. Again, thinking here of the fallout from the war in Ukraine, which has brought a spike in prices of energy, food, fertilizer, industrial chemicals, and also just the supply chains more broadly, which have been larger or longer lasting than anticipated. So The sentence that we deleted said that we believe that appropriate monetary policy effectively alone can bring about the result of 2% inflation with a strong labor market. And so much of it is really not down to monetary policy. It just didn't, the sentence isn't, it kind of says on its face that monetary policy alone can do this. And that just didn't seem appropriate, so we took the sentence out.
See, I love the press because they ask really hard questions of Jerome Powell, and it takes a while, but eventually we get to the truth of the matter. And what Jerome Powell is saying here is monetary policy, that is what is within the Fed's control, cannot get inflation down to 2% while keeping the economy strong. It is physically impossible. Jerome Powell is saying that the Fed by itself cannot accomplish a soft landing. What the reporter was getting at is, if the Fed is fighting inflation by themselves, we're going to enter into a recession. It's inevitable. Jerome Powell is saying he cannot get inflation down to 2% while keeping the labor market strong with only monetary policy, or what is within the Fed's control. At this point, the only way to get inflation down and avoid a recession, in other words, the only way to avoid stagflation, is for Congress to get involved. Congress and the Treasury Department have to use their tools in conjunction with monetary policy in order to get the economy back on a solid footing and avoid a major recession or even depression. The Fed, at this point, Jerome Powell is throwing his hands up in the air and saying, we cannot do this on our own. It is physically impossible. And that is really, really scary to me, because I have not seen any indication whatsoever from Congress or Treasury Department, any sort of willingness to help the Fed fight this. It so far looks like all of the burden is being put on the Fed, and Jerome Powell is saying, we are out of options, we are out of tools, we cannot bring inflation down without causing a recession. So unless Congress starts to get involved and does something, it's going to be really, really bad for the U.S. economy. And sadly, the only thing Congress can really do is print more money, and that's just going to make things worse. So there's really no good way out of this. It's bad, and there's nothing else the Fed can do.
There's no sign of a broader slowdown that I can see in the economy. People are talking about it a lot. Consumer confidence is very low. That's probably related to gas prices, and also just stock prices to some extent for other people. But that's what we're seeing. We're not seeing a broad slowdown. We see job growth slowing, but it's still at quite robust levels. We see the economy slowing a bit, but still growth levels, healthy growth levels.
What? Wait, what? No, what? No sign of a slowdown in the economy? Jerome Powell is higher than Elon Musk on Joe Rogan. He's going to be getting a call from Snoop Dogg tomorrow asking where he can get some of that stuff. What is he talking about? Man, talk about losing credibility from the Fed. Man, moving on.
We're responsible for inflation in the law, and inflation means headline inflation. So that's our ultimate goal. We, of course, like all central banks do, look very, very carefully at core inflation because it's a much better predictor, and it's a much better predictor of where inflation is going, and it's also more relevant to our tools. As I mentioned, the parts that don't go into core are mostly outside the scope of our tools, so we look at that.
So what Jerome Powell is saying here is really important. He's saying that the Fed is tasked with bringing inflation down, but the Fed only has control over the items that are in core inflation or core CPI, meaning the Fed has literally zero control over commodities. They have no control over food prices. They have no control over energy prices. And if food and energy remain extremely high, the Fed can bring core inflation down all they want. It's not going to fix inflation. So the Fed has been tasked with bringing inflation down, but he's saying he literally cannot do it. They do not have the tools in the toolbox to bring inflation down.
Do you still think a softish landing is possible, and how would you define that at this point, considering the revised projections for unemployment, GDP, inflation?
So I think what's in the SEP would certainly meet that test. If you see, you're looking at getting back down to almost a 2% inflation by 2024, and the unemployment rate is still as low as 4.1%. I would call that as meeting that test. Do I still think that we can do that? I do. I don't want to be the handicapper here. That is our objective. And I do think it's possible. Like I said, though, I think that events of the last few months have raised the degree of difficulty, created great challenges. And again, the answer to the question, can we still do it? There's a much bigger chance now that it'll depend on factors that we don't control, which is, fluctuations and spikes in commodity prices could wind up taking that option out of our hands.
So now Jerome Powell is admitting that the possibility of getting a softish landing, that is bringing inflation down without hurting the economy, is extremely unlikely. He's saying that there's factors beyond his control, that the Fed by themselves is going to be completely unable to get this softest landing.
Of course, we've been looking, very carefully and hard at why inflation picked up so much more than expected last year and why it proved so persistent. It's hard to overstate the extent of interest we have in that question, morning, noon, and night.
What? You don't know? You don't know why inflation picked up so much? Jerome, come on, man. You were the one printing the money. 80% of all U.S. dollars in existence were printed in the last 2 years. That's right. The U.S. currency supply has increased 500% in the last 2 years. And you don't know why inflation went up? Come on, man.
I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again.
And the very last thing that Jerome Powell said before he ended his press conference is, don't buy a house. He said that prices are too high, mortgage rates are too high, and we need to wait for a reset between supply and demand for everything to come back down. Okay, that's everything Jerome Powell said. Where do we go from here? Well, on Thursday, I do expect the stock market to be green. The 4-hour just had a MACD golden cross. The markets were up on Wednesday. They usually continue whatever happened on Wednesday. So Thursday, the market should be green. But after that is a huge unknown. I literally have no clue where the markets are going to go from here. I will try to update you guys on Thursday with a little bit better projection on where the markets are going to go for the rest of this week, rest of the month. But as of today, I don't know. I spent the entire day trying to figure out what Jerome Powell just said and make sense of it all, because some of the things he said were a little insane. So this is the best I could do right now. Green day on Thursday. But in tomorrow's video, I'll have a lot more information and insight for you guys. I hope you enjoyed this video and got a lot out of it. If you are not yet a member of the VIP Discord, come join us. I got all kinds of coaching and training over there. We had a lot of education going on in the VIP Discord today. If you're interested in getting some coaching, some education, how to trade options, we go over all that over there. You can join us at stockcurry.vip/getvip. That's stockcurry.vip/getvip. I also wanted to remind you that Webull is still offering their 6 free stocks promotion, where if you sign up using my link in the description below and deposit just $1, Webull will give you 6 free stocks worth up to $12,600. All right, guys, I hope you enjoyed the video and got a lot out of it. Don't forget to hit the like button and subscribe. And if you're on YouTube, go ahead and click the bell icon and click all. I hope you have a lot of success trading, and I will see you tomorrow.